Frederic, thanks for being back on the show. I do want to get your take on this notion of a so-called pivot, because we've had a lot of Fed speak. We're expecting more this week. So far, officials have come out and pretty strongly said that the need to tighten continues. However, perhaps some shift, depending on who you're listening to in the last couple of days, in terms of how quickly that pace of tightening will continue as we come to the end of the year. Your thoughts?
So I think, first of all, the Fed should not pivot, and I don't think they will pivot. I think they very much understand the kind of mistakes that have been made in the past when you start to raise rates and then you basically chicken out when the economy starts to take a little bit of a hit. The economy hasn't really taken a big hit yet. The Fed actually knows that so far that they actually reverse course so quickly has actually worked pretty well. They had lost a lot of credibility because of some mistakes that I think they made. I have been very critical of them. They actually turned the ship around much faster than I expected them to, which is very good news. And actually, they've had some success. Inflation expectations have come back down. I think the markets are understanding that the Fed is going to have to be tough. There are some elements of the markets that don't believe that. In fact, the markets have also been behind the curve, always expecting the Fed not to do as much as it needed to do. And the Fed has actually surprised them recently by being tough in a way that they had to be. So I think the Fed's doing the right job, and I think the markets are making a mistake thinking there's going to be a pivot.
Yeah. Is it a mistake to read into when you have Vice Chair Brainerd coming out a couple of days ago and saying we also recognize that risks may become more two-sided at some point and that uncertainty is currently high and there are a range of estimates around the appropriate destination of the target range for the cycle? Should markets not pay such close attention to commentary like that right now? Or does that speak to the fact that we are seeing some major volatility and we are potentially seeing some warning signs in credit, for example?
Yes. So, look, there is an issue which is a separate issue, which is what we've seen happening in the UK and the dilemma for the Bank of England, which is that if your fiscal policy is out of control, that you basically start talking about cutting taxes and make no efforts to restrain spending in a situation like we're in right now, then, in fact, we can get into a situation which is called fiscal dominance by the academics, where even though the central bank wants to do the job of tightening, they have a problem because the debt markets may be reacting so badly in an unstable way that the central bank has to intervene, which is exactly what we've seen happen in the UK. And the central bank is basically between a rock and a hard place. So this problem is a serious one. One of the things we know is in terms of research is that central bankers can't do their job alone. They have to have fiscal responsibility in order to control inflation. And unfortunately, UK is showing that if you don't do that, you have problems. And also, the U.S. fiscal policy has been way too expansionary. The Biden 2021 bill was a bad bill, way too large, and we're paying some penalty for that. So the central bank has to stay tough. In fact, it's playing a game a little bit with the fiscal authorities, saying we have to be tough. They may have to actually intervene directly in markets to keep them functioning well, but on the other hand, they have to keep tightening. And that's exactly what the Bank of England has indicated they'll do. Now, I don't know if they'll be able to continue to do that, but that's the nature of the game that they have to play.
Shepard Smith here. Thanks for watching CNBC on YouTube.